What's going on, guys? So welcome back to another video. In this one, we're going to be going over some ways that you guys can actually make yourself some money in this market right now, because at the end of the day, that's kind of all what we are here to do: make money in this market, put our money out there and have it work for us. So we're going to be actually going over some trades from Pythagoras, the new algorithm that we've released to retail investors that is so incredibly powerful. And again, if you guys don't want to have to wait for these videos to come out to see one or two of these trades every single day, make sure you check out that link down below. Again, we offer so much more than just the alerts. We have Invictus, the two trading algorithms right now, Pythagoras and Trader Joe, the 450 plus stocks that we alert on multiple different time frames, stocks and cryptos, over 65 private live streams, a full built-out learning curriculum, real-time options data. So again, if you are interested in that, make sure you check out that link down below. But let's get right into it here and kind of go over some of the things that have been happening with the market, because when we think about kind of taking swing trades, again, these trades are going to be perfect for people with a 9-to-5 job. Well, we have to understand what's actually going on with the market right now. So when we look at the SPY here, remember, we were calling out that we were most likely going to see a run up to around 430, and then we were going to start to reject. Currently, the SPY closed today at about 413.35, and there's a couple of reasons why we saw this pretty significant run up. Two main reasons in particular. If you remember about a month ago, when we were reading some of the data coming out of Goldman Sachs, it was either the highest in the last 10 years or the second highest since 2008, the amount of short interest that was coming into the overall market. So what ended up happening is a lot of people were crowding into this trade to the downside. The market started to reverse, short started to get out, and we ended up seeing this pretty significant run up. The second reason, which is kind of two reasons in one, we had a pretty significant monthly options expiration period happening last week. And kind of combining this with the month of August, there was no Fed meeting, so no real fear of a rate hike coming in. But now that we're heading into the later half of August and coming into September, where we are going to be having another FOMC meeting and the Jackson Hole Symposium this week, well, there is room for a little bit more fear in the market. So let's kind of go over two of these trades here, break them down, and make sure that you guys understand exactly what you want to look for once you guys hop in there and start seeing these alerts and these trades for yourself when they start firing off. Again, we're going to be going over two, but there are a lot that are firing off every single day, and I want you guys to be fully prepared. So the first one is going to be LYV Live Nation. And as you guys can see here, we're going to be looking at the daily time frame, which is going to be great for people with 9-to-5 jobs who can't necessarily sit and look at the screen every single second of the day. Now, again, when we are trading on the daily time frames, it's usually best practice to get contracts, if you are trading options, with more than a month out in time, just so you can decrease the effects of theta or time decay and kind of make your positions a little bit less volatile in the holding period up until expiration. So looking at this chart here, we saw a pretty significant rejection off of this level of resistance here, and then also kind of breaking down this 200 EMA. Now, we are starting to see the 13 EMA bend to the downside, and what you may notice here, if you've been around watching my videos, Gabe's videos, TMI's videos, is that this actually hasn't crossed yet. But that's the beauty of these new algorithms that we have. They are able to predict with a pretty high degree of certainty when these crosses are going to happen before they even do. Now, looking at this chart here, we see the RSI is now below its moving average, now below 50 as well. The MACD showing a lot of bearish momentum here, and the shaft trend cycle has also signaled sell. Now, when we're looking at this chart here, we can see that we are starting to slip below these previous levels of resistance. And when we look down a little bit further, it's very possible that we end up coming down to these lows here. Again, 81.81 is going to be a pretty significant drop. We have a couple of levels back here at 89. We're currently closed on LYV at 91.38. So there is a lot of room for this stock to end up coming down, especially with this predictive daily cross to the downside. Now, I do want to kind of get into this second trade here too, because this is going to be an interesting one as well. It might be a little bit more affordable for you guys with some smaller accounts, because LYV is trading at 91, so the options that are going to be a month out closer to the money are going to be a little bit more expensive. But when we take a look at eBay here, we have something very, very similar. We just cracked this previous level of resistance that could end up turning into support, but we are kind of selling off through this right here. eBay did just announce a small acquisition, and when that happens, companies do tend to sell off a little bit more as well because they are burning cash. We have this predictive cross coming to the downside here. RSI below its moving average, below 50. MACD looking very similar here. And same thing with the shaft trend cycle. So eBay and LYV definitely have some more room to the downside here. Again, another downside target on eBay that we could end up seeing, $43.23, this level of support down here. If we end up cracking below there, we could end up seeing those more recent lows in 40 to the 40.50 range here. So to kind of wrap this up here, if some of this new information that I'm throwing at you guys might seem a little bit overwhelming, again, guys, check out that link down below. We have a full built-out curriculum teaching you guys how to do this in kind of a more in-depth way that I'm able to put in these short videos that I'm creating for you guys here. We've got those live streams, an awesome community. But again, to kind of wrap it up, what we're looking at here is this predictive cross to the downside. Now, again, when you use these other indicators as well, the relative strength index, the RSI, the MACD, showing that bearish momentum as well, you're confirming the trend on these longer time frames. And again, when you're trading on a longer time frame, such as the daily or the 4-hour here, and you do want to be trading options, at a bare minimum, you want to be getting at least a month out in time to kind of lessen the amount of volatility that you're going to be witnessing every single day as we start to see these share prices start to fluctuate around. So guys, that is going to wrap up this update here. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who do want to learn. Other than that, guys, I will see you in the next one. Peace.